Hi, and welcome to this edition of the Options Learning Center. My name is Rick Orford, and I've been a stocks and options trader since 1999. And today I publish content for some of the most prominent publications, including Barchart. In this video, you'll learn how to buy put options and use Barchart to get the most out of the strategy. Put options give the buyer the right, but not the obligation, to sell a specified asset at a specified price, the strike price, at any time before the expiration date. Every put option is equal to 100 shares of the underlying asset. The buyer of the long put is known to be long, hence the term long put. Long puts are a bearish strategy that earns profit as the underlying asset's price moves below the strike price. Investors usually buy long puts to protect their underlying assets from a loss, and this is also called a protective put. The put option will gain in value when the underlying security moves below a certain point. Buyers usually profit from long puts by selling them back to the market if the premium is higher than they paid at the start of the trade. Alternatively, investors holding long puts can exercise the option and sell their shares at the strike price regardless of how much the asset price decreases. Now, let's look for some potential long puts in the market. Barchart allows you to look for long put trades in many ways. Long puts are often used to protect shares that you already own. Barchart makes that easy by allowing you to scan for long puts using specific assets. Let's say, for example, that you own 100 shares of NVIDIA with a cost basis of $90 per share. And today, NVIDIA's price is $126.57. But maybe you're worried that it might start to move down. Not only that, the charts and technical analysis also indicate a potential bearish reversal or sideways movement. However, you don't want to sell your NVIDIA shares just yet, as the reversal may not happen or it could just be temporary. Now, traders sometimes use a stop loss for their shares to protect their profits or minimize losses. However, a stop loss automatically sells your shares at the current market price when the underlying stock reaches the stop loss price. And that means that you could get a lower price than expected on the sale. A put option allows you to protect your shares with a larger degree of flexibility. Let's say you'd like to protect your NVIDIA shares from them moving below $121 and at the same time retain the possibility of selling them at a higher price. In this case, you can buy a long put with a strike price around $121 and set an expiration date, say 6 months out. To look for long puts on a specific stock, go to your asset page and navigate to the left side of the screen where the options screener is. Click on Long Call/Put, then click on the Long Put tab. Once there, you'll see NVIDIA's options chain. Click on Long Put. Next, select an expiry date, say 6 months from now, which is December 20th, 2024. Now you can see it displays the number of days to expiration. And now we can identify the $121 strike on the second page. And as you can see, the price is $16.60. And remember, since one put equals 100 shares, therefore the contract price is $1,660. That's the premium. Now you have 6 months of downside protection for your NVIDIA shares for $1,660. But it doesn't end there. You'll also need to know your break-even point on this trade. Now you might say, hey, wait, am I not profitable if the stock moves below $121? Well, you also have to wait for the stock to drop as much as the premium you paid before seeing any profit. Your long put will start to become profitable if NVIDIA stock trades below your break-even point, which is $104.40. And that's the strike price minus the premium paid to enter the trade. Let's assume that NVIDIA crashed and started to trade around $70 3 months from now. At this point, there's about 3 months of time value left on the option. In this case, the option will be worth more than you paid. You'll have $51 of intrinsic value and likely another $10 of extrinsic value, making the premium around $61. And now you have a choice to make. Do you sell your put or do you exercise it? Since there's still a lot of time value, you'll probably be better off selling your long put at the market price of $61 a share or $6,100 per contract. You'll make a profit of $4,440 on the put option trade, but remember, based on your entry price of $90 for the stock, you'll have a $20 a share loss for your NVIDIA stock, or $2,000. But the beauty of selling the put, or closing it out, is that you don't have to sell your shares. You could just sell the put and keep the shares, especially if you believe the shares are going to go back up in price. Of course, if you have no faith in NVIDIA, you could just cut your losses and sell the stock as well. Now, let's assume that NVIDIA trades around $70 at the expiration date. You can exercise your put and sell your shares at $121 each, and since your cost basis is $90, well, you're going to retain a good chunk of profit minus what you paid for the protective put. Or you can sell the put back to the market, and at this point it'll have about $51 of intrinsic value. Since the expiration date is around the corner, there won't be much extrinsic value left, so the option premium will likely be around $51. So as you can see, buying a put on an asset that you own can provide you with downside protection. In this case, if you didn't buy the put, you'd have registered a $2,000 loss. However, the long put saved the day, and you would have come out ahead by $1,440. On the other hand, if NVIDIA's price increases over the 6-month period, your long put will begin to lose value. And if NVIDIA's stock price stays above the $121 strike at expiration, the option is going to expire worthless. And that's why long puts are kind of like an insurance policy that hopefully you don't have to use. Now, what if you're looking for something a little more specific? Say, for example, maybe you think $16.60 is too much premium to pay for the $121 strike. Well, you can screen for NVIDIA puts with a premium of less than $16.60 that have a $121 strike. And in this case, you'll have different expiration dates. And here's how to do it. To customize your screen, click on Screen, then Set Filters. Since you are already on the NVIDIA page, NVDA stock will already be populated. Now, select the ask price, which is the premium, and add it. And then do the same for the strike price. For the ask price, we'll say less than $16.60. And for the strike price, I'll enter a range of $100 to $125. And we'll also have to set the expiration date. So I'll add the days to expiration feature and set it from 0 to 365 days from today. And here we have all the results. As you can see, all the ask prices are below $16.60, with the different strike prices and expiration dates. You can then buy the option that works best for you. You can also screen the entire market for long puts using the option screener. To access the option screener, click on the options at the top, go to the option screener section, and select your desired strategy. So let's select the long put screener. You're then provided a list of long puts and relevant details like implied volatility, delta, and ask price. Clicking on any of these column headings will arrange the value from lowest to highest or vice versa. So you can look for long puts that fit your preference and trading strategy. Long puts are suitable if you have a bearish outlook and the risks are limited to the premium you paid at the start of the trade. Now, you don't have to buy necessarily puts on stocks that you already own. Long puts can also be profitable if they're used for speculation, but you do have to get the direction right. And don't forget, long puts are time sensitive, which is called theta decay, as long options lose their value as they get closer to expiration. As such, using long puts requires accurate timing. For that reason, it's not uncommon to buy puts with very long expirations. And in some cases, expirations can be more than a year out. As you can see, long puts can be a versatile options trading strategy to protect your positions. Using tools like Bar Charts Option Screener, and of course, supplementing your trading knowledge through the Option Learning Center can definitely help ensure success in your options trading and help you get that edge to find your perfect trade.